mortgage broker. I am a licensed loan officer, mortgage broker with Edge Home Finance, and I work to help you all get the best rates, pricing, and products to purchase your home or investment property. I work with over 100 lenders, and I'm able to support you on your journey to owning a home. I'm also a real estate investor. That's actually how I entered the real estate field. And I basically specialize in long-term rentals and I manage rental properties as well. And I've been doing that for about 6 years or so. I have a background in business and I'm really excited to connect with you all and answer all your questions and teach you about kind of what's required to get and ultimately the financing you see. Thank you.
Thank you, thank you, thank you so much, Jodi-Kaye. Listen, that means that you just heard that your potential new loan officer has already her own personal experience in real estate, which is super important and is very valuable when you're navigating oftentimes the biggest purchase of your life. Now, this is not, a dig or anything to anybody else who's in the mortgage lending space, but it absolutely makes a difference when the professional that you're working with has done this before themselves, because now they're able to use their personal experience in addition to their professional experience on the job to be able to help you with this transaction. And similar to Jodi-Kaye, right? I too had my own experience in real estate before I became a licensed real estate agent. Okay. I spent over a decade within the financial services space. I started my career within the banking industry as a part-time teller, navigated all the way through branch management, holding several roles in between as a personal banker, business banker, all of the things. And remember purchasing my first house while I was a banker at a very major institution and being that close, right, to my loan officer who would come to my branch all ready to support other clients. That really gave me some additional backhand knowledge on how to really be able to navigate the real estate process in a way that felt seamless to me and in a way that felt safe and less scary. Because also, let's be honest, purchasing real estate can feel scary, especially if you've never done it before, especially if you've never seen someone navigate step by step themselves before, especially if you didn't see your parents or your grandparents own their own property. It can just feel like a scary thing. But oftentimes it's only scary because it's new and because we just haven't done it before. But when you have professionals to support you, right, who's done it before, that adds an extra layer of support. And honestly, I hope that it adds an extra layer of safety for you all. So I too, real estate investor, manage my own portfolio and a couple of other properties for some folks in the industry. Second generation entrepreneur. I've been around real estate most of my life. My father is a plumber, and if you know anything, then you know that the trades are important to real estate. We need our tradesmen to navigate the real estate space. Last year, I had the opportunity to win the Rising Star Award at my real estate broker. So we're out here trying to make a difference. If you didn't know me before becoming a real estate agent, well, hopefully all of my other roles and things that I have held also adds a little bit of comfort to you all as well. Today, our objective really is to make sure that you have the information needed to transition from just dreaming about homeownership, just having it on your vision board, from talking about it with your family and friends to actually doing it. But to do it, you have to be prepared, right? This is one of those purchases in your life that you do not want to do and you're not prepared. We want to make sure that not only that you have access to information, right, beyond what you learn on Google and ChatGPT, but from real people who are out here doing it day to day, but we also want you to know what tools and resources are out there for you to be able to navigate this journey. There is no question that is a silly question. There is no question that is too small. So we encourage you to please drop your questions in the chat, drop them on Facebook Live. Let us know how we can answer some of those questions. If you would prefer to remain anonymous in asking your question, feel free to DM me personally here in the Zoom room so that I can just see who sent it, and I'll ask your question broadly and be able to help answer that as well. If that works for you all, we're going to continue moving forward. One of my favorite quotes is that you do not need to be rich in order to buy a home. You just need to be ready. And readiness begins with the right mindset first, right? Then the right habits, and then the right team. Now, obviously, you all are here, so we have some form of right of the mindset to think about home ownership. I don't know your level of readiness according to you, but you've gotten started. You've done something, right? So also pat yourself on the back for even signing up for today's workshop because you didn't have to be here this morning, but you are here. So you are putting your best foot forward, right? But also, we want to make sure that you have the right team. And that is why Jodi-Kaye and I are here today to really introduce you to two of the most important people in your homeownership journey and your journey to becoming an investor. Okay. Starting with me as your realtor. I am going to be one of the most, and I'm saying, speaking it into existence, I am your realtor, right? It's more than just me holding the keys and preparing a sign for you to hold up at the end of the transaction, right? It's deeper than just videos and house tours and shopping and all of the things, right? It's about having that expert guidance to help you navigate market trends and pricing and inventory and helping you to understand your neighborhoods and future developments that's coming because yes, we want to purchase to either live in a house or to, add an investment property to our portfolio for cash flow reasons. But you want to understand what's happening in the market around you so that you can make sure that you're choosing the right place. Because in real estate, location, location, location is everything. Whether that's going to be you living in that home with your family, or if that's you preparing to rent that property to a family, right? Or to someone else. You want to think about based on where you're purchasing real estate, what are the future opportunities that you're going to be able to take advantage of? My job is to help you think about those things, especially as an investor minded realtor. We want to have those conversations. What are your long term goals? Yes, the goal today is to purchase this property, but what do you see for the future of this property? What do you want it to be one day? Because oftentimes our first purchase is never really our forever home, right? It's usually temporary. It's usually that first opportunity at creating an investment portfolio. On average, most people, and I don't have the data with me, but most people purchase about two homes in their lifetime. So, with us stepping into this as the first home, or whether it's the second or the third, you still want to make sure that you have that guidance. But also, my job as your realtor is to act in your best interest, period. Okay. I have a fiduciary duty to make sure that I am looking out for you, to making sure that I am not pressuring you into deals to rush you through a transaction just to get a commission check at the end of that. Okay. And especially for me, who's doing this not for the money, but doing it for the legacy and for the support that we get to bring our communities and helping us to create wealth, you want a realtor like me, right? Because there are some out there, right? And again, I love all of my realtor peers, but there are some out there who are living more transaction to transaction and they're just ready to move to the next transaction. You don't want to feel like just a number. You don't want to feel like just a transaction, just a commission check number when it comes to your realtor, because then they don't necessarily help you make the best decisions. I'm pretty sure we all know at least one person in our life somewhere who said they had a realtor that they didn't necessarily love, right? Where the experience might not have been amazing. And nobody's perfect, but you at least want to have a realtor who is honest and integral and who has a high moral compass, because all of those things are going to impact you in your deal, right? From a loyalty perspective, but also from a confidentiality perspective. You don't want to work with someone who's telling your business to all of their other realtor friends at happy hour. You don't want that. But you also want somebody who could be obedient to your needs. What is it that you desire? Our job is to help stay in alignment with that and to provide reasonable care. Okay. Even if you have a realtor that you're already working with, even if you find out that, you know what, Lindsay, I want to purchase over here in a state that I might not be licensed in, or even if you say, Lindsay, hey, I've been having a realtor in my family for all of these years, I can't not go with my auntie who's a realtor, that's okay too. You still just want to make sure they're providing you with a certain level of service and care, regardless of who you are to them and regardless how long that you've known them. Now, because today's conversation is catered to both future homeowners and, right, our investors, I want you to start thinking about which one is your dream for right now. How are you defining your current real estate goal? And you don't have to answer in the chat, but I want you to at least think about it. I want you to know how you're coming into this particular transactional opportunity, to this new real estate relationship. Okay. Are you looking to become a homeowner? Where you're looking to buy your primary residence that you're going to move into? Those things are important to know and to differentiate because the path is a little bit different, mostly the same, but just a little bit different, especially in the very beginning when it comes to financing. Typically, homeowners, you're going to use those traditional and sometimes non-traditional mortgage lenders to be able to support you through your transaction. When you're purchasing your primary residence, I know most people think that because we saw it a long time ago that you have to have 20% down. That's not true. You can purchase your home as low as 3% down, 5% down, just depending on the product type. And that's what Jodi-Kaye is going to come in at a little bit later around mortgage products and services and ways to think about how, right, to prepare for the purchase of that property. But when you are looking for your primary residence, you're going to have lower down payment options. But also, you have home buyer grants, especially for first time home buyers. There are some grants where you don't have to be a first time home buyer, but usually those opportunities are reserved for folks who are purchasing their primary residence. It's a lower cost option. And for me, I started my investment journey and portfolio by buying my primary residence first, lived in it for a little while, then put it on the market for rent. Whatever your journey is, right? It's yours. Let's just make sure that we have the tools and resources and the knowledge power to actually activate that journey and to feel comfortable in that. As an investor, right, your journey is going to be a little bit differently with securing your financing. Oftentimes, you can work with the same traditional lenders, or you have the option to work with investor specific lenders who have products specifically for investment properties that will be earning rental income. You want to, I always say, talk to all of them, right? Just see what the products are that are out there, but then make sure that you make your way back to Jodi-Kaye so that she can help you finance that deal. And she supports both our primary residents as our home buyers, and she supports our investors who are out there looking for their next investment property. Now, when it comes to jumping in as an investor, I think it's important to know that you're usually going to have higher down payment costs depending on the loan to value that's set by that specific lender. So most commonly, right, and it just depends on each lender, but most commonly when you're starting off and you want to purchase that investment property, most people kind of have in their mind, right, to start thinking about anywhere between 25 and 15% in a down payment. You want to think about that. It costs more to just jump into the game as an investor straight out when you're buying a property that you do not plan to occupy at all. Okay. Now, there is a way to do both of these at the same time, right? When we're thinking about acquisition, property acquisition, but that's when you want to choose a property that can make you both, that can make you a homeowner and an investor simultaneously. And usually the most popular is purchasing multifamily units where you can purchase a duplex or a triplex or a quadruplex, right? And you have one unit that you plan to occupy, which is your primary residence. And then the other units will be for rent, making you both a homeowner and an investor, right? So that's kind of that medium column. And for those opportunities, when you're looking to purchase multifamily, you can absolutely still use a traditional loan for home buyers. And of course, Jodi-Kaye can jump into this deeper, but you can get a mortgage for a property up to 4 units. Okay. I always tell people if I knew now, if I knew then what I know now when I made my first purchase, it would have been a multifamily resident so that I can live in it, but I'm also sharing living expenses with my tenants, right? Just depending on how much you charge in rent and how much your mortgage is, that can give you a lot of cost savings when it comes to your house. Everybody might not want to live in the same building as their tenants. I get it. But sometimes you bite the bullet for the long-term picture because you don't have to stay there forever. That could just be a way for you to accumulate more doors under one roof because that also can sometimes save on maintenance expenses, etc. So I want you all to start thinking about as you hear more information in today's conversation, which side of the pillar do you want to sit on? And are we thinking about being in the middle where Lindsay, I want a multifamily unit? So that you know how to set your goals and so that you know how to have conversations with your realtor and with your loan officer. Yes, we're going to ask those questions to help guide and to help us narrow down the search, but you want to kind of have a general idea of what you're going into. And when you do that, you want to think about what are your needs versus your wants? Because again, as I mentioned, oftentimes your first purchase or even sometimes your second purchase might not be your only purchase forever. So you want to think about, is this something that I really need or is this something that I kind of want and I can add on later or I can save that expectation for the forever home? What does that look like for you? But as a need, we do want to know what are the bedroom bath size, right? If you want to be within a specific school district, right? Now, as a realtor, legally, I can't really talk to you a lot about how schools are, et cetera, but you can do your own due diligence and research, right? To see what district do you want to be in? What schools are you most interested in and what's going to give you the best commute time? Whether it's the commute time to the school for your children or the commute time for your job. Those are important. You want to think about that. Also, neighborhood safety, right? I think that's a need because you want to feel comfortable walking out of your front door every day. Yes, there are, especially when you're in cities like Baltimore, where sometimes we are block by block. Yes, new development is happening in a lot of areas, but at least at a bare minimum, right? Can you ask yourself, do I feel safe going from my front door to my car? And if your answer is no, that's when we might need to have some additional conversations. But again, if you also see in those communities where you do feel safe, you see that there are just some areas of opportunity there, don't completely stray away from that, right? Because that's where opportunity lies, especially when you know development is already happening in these communities. Because you have an opportunity sometimes to come in and purchase a property that already has equity built in, or to purchase a property and to see appreciation happen quicker than normal because there's lots of developments happening and lots of new comps being developed in your community. So, think about what are those things that you need, but also think about the things that maybe this is a want category. Updated kitchen finishes, right? That's just an example. For some of us who love to cook and who stay in the kitchen often, a nice kitchen might be on your needs list, and that's okay too. But you want to be able to separate the two and really ask yourself, right? How do we truly define what that looks like? Do you want a spacious backyard area? Is it something you gotta have? Or is it something that might be on your later list, right? Is there land that you're getting that has trees that you might be able to cut down later on to make an even bigger yard? Do we need that private swimming pool, or is that something that we can wait on for the next acquisition or just at a later date to maybe build that into your yard? You want to think about these things because this is going to help you with your home search. Finding the absolute perfect property with every single thing you want sometimes may or may not be in the cards. So you want to at least be able to set aside, okay, these are the things that are an absolute versus these are the things that I'm willing to bend on, to negotiate a little bit with, right? Once we kind of find that property, we really, this is where, it gets fun for me. Less fun for you, right? Because it's paperwork, money conversations and all of the things. But this is where we start structuring for success, right? When we're thinking about that perfect offer that we want to submit. Okay. I like for my clients, when we're submitting offers to win. And that's offers where we want to make sure that aligns with what you are ready for, with what's comfortable for you, but what's also still fair to that seller, because we want to make sure that they don't look at us as a joke, right? When we're submitting that offer. So we want to think about the price point that we actually want to offer for the property. We want to think about how much money do we want to put down in our earnest money deposit. Your earnest money deposit is going to be your initial deposit to kind of lock in that home, okay, with that seller. That's going to be really, really important. Oftentimes, it's typically anywhere between 1 and 3% of the purchase price. However, sometimes you can, not sometimes, but you can always negotiate that. It's important to tell me, my job is to help seal the deal in that offer, but it's your job to tell me, hey, Lindsay, this is what I'm comfortable with. This is the range that I can work within. And then we go to work from there. But we want to make sure that we're confident in that. We want to think about in this offer, what are the contingencies that we're putting in? And we'll talk a little bit more about that momentarily, but your contingencies protect your interests. They want to make sure that they're covering inspection period, appraisals, financing conditions, etc. Right? We want to think about all of that and putting them in the contract, because when you put in those contingencies, that can help save you, so that if anything happens, right, that is negative and it has nothing to do with you per se, we want to be able to negotiate to get your earnest money deposit back, because there are times where sellers will keep your earnest money deposit back when you don't show up and do your part as a buyer. Okay. It is really, really important. But also just strategic negotiation in general, right? It is my job to help optimize the terms on this deal, right? To think about what are those market conditions, to think about what happens if we're in a bidding war with multiple offers. How are we going to influence that strategy? And one of my superpowers is building relationships typically before we even go see the property, but definitely afterwards. And you told me you're interested. I'm calling the listing agent. I'm having a conversation with them, understanding what they know about the property, what they're willing to share, learning if you have other offers. If so, are you open to share some of the details about those offers? And just building a relationship, because sometimes it's the relationship and how you carry yourself and how you navigate conversation that really will have a listing agent and that seller say, you know what? I might have 5 offers, but I like them. I enjoyed speaking to them, because that lets them know that, you know what, this is going to be a smooth interaction. And nobody wants to be in a deal, right, for 30 days or so and don't enjoy working with the people that you're working with so closely, because we're all going to get real close in that short amount of time between your loan officer, your me as your realtor, right? But also that listing agent, right? Your title company. We're all going to be working very close. And sometimes we make decisions off of who do we actually want to work with, because not all money is good money. You could have somebody who exceed the offer price, but is their agent not that friendly? Do they seem disorganized? Do you kind of get that weird feeling and vibe from them? I promise you, it makes a difference, because I too sit as a listing agent. Okay. So I'm taking those calls from those buyer agents. And sometimes I'm telling my seller, yeah, this one, I can feel that this would be a really great interaction just based off of the energy from the phone call. Those things are important. Don't sleep on the small things that might not be within the paperwork, but you want to think about what are those things that I don't know that people also think about, right? We are giving y'all the juice, right? We are giving you the squeeze so that you know how to evaluate, how to interview your potential partners in every aspect of this deal. Okay. Again, I am more than a key holder, right? My job is to also help you navigate this with purpose and intention, right? Helping you to identify potential issues, walking through the home and being able to see and point out those spots when we're walking in. Do we see a brown stain on the ceiling? Does that typically indicate water damage, right? Do we see one too many pest traps around here, right? Let's talk about that. Are we in there and we feel that it's the summertime and this air is not on? I can understand your seller wanting to save money when it comes to that. However, right, is the HVAC system working or not? Right? Yes, we're going to find those things out, right, in your detailed reporting with your inspection. However, you want a realtor who thinks about those things, who can see those things. And when we step on a step and you know what, this feels a little bit loose. I wonder what's going on under here, under this joint when we go in the basement and actually look up. So you want someone who gets to know real estate, who doesn't mind walking through, who doesn't mind those scary basements, right? Who that might not be finished. You want someone who's comfortable walking in there with you, who's hard hat ready, flashlight ready to help you choose the house for you. But again, right, we're still going to have those inspections. My job as your realtor is to also help you build that team. You might not come in with your own home inspector. If you do, amazing from your research. If not, that's okay too. It's my job to make sure that I have options for you to be able to select from. Yes, most realtors and partners, we have our preferred person, but we usually have a couple, right? And I always say, look at everybody's website, see what you like, see what you don't like, look at the fees because there are different rates based on different inspection companies, based on the different types of inspections that we're getting. We want to talk through those things, right? At the bare minimum, we're at least going to get a home inspection. And we want to make sure that we have a contingency around that home inspection to make sure that we're not walking into a dud, okay? Just like people will sell you lemons as a car, they will also sell you lemons as a house. And as soon as you get in there, everything is falling apart. We want to make sure that we're doing our due diligence. And you have an inspector who care, right? Who will spend some time. You don't want anybody who's coming in there rushing, who just want to go ahead and navigate through the paperwork real quick to the next appointment. You want them to take their time and you want to be there for your home inspection. Okay. Oftentimes, your realtor will be there with you. However, if they can't, they might send a representative, someone else on their team. But you, my friend, are the non-negotiable. You absolutely want to be there for your home inspection because that report is going to come back and it's usually going to come back very thick. You want to already kind of know what are those things in this report that they're talking about. Okay. Oh, I remember them taking that picture and them pointing this out to me because a good inspector will also point out things that might not make the inspection report as far as your seller needs to fix it, but these are things to think about just in case for the future. So you already know coming in that yes, this window locks right now, but we can see the wear and tear with this locking mechanism so that you're not surprised if a year from now the locking mechanism no longer works and you have to replace that, right? Some things you'll negotiate for your sellers to repair, but some things you'll just take it on the chin. And we know that it's something that we have to think about in the future, okay? You also want to think about what other inspections will you need based off of your initial home inspection. They may say, hey, you need a radon inspection. Hey, you need a termite inspection. You want to know, hey, you might want a separate roof inspection that is separate by a roofer that can be certified. Your inspector should tell you what are those additional inspections you should consider, okay, with your property. Do not go the option where, Lindsay, I'm going to save my money and say no to all of these things. If they're telling you for a reason, okay? And you'd rather spend $200 on this inspection over here versus $2,000 after you move in because of something that we ignored, okay? Going through this process, you want to be intentional. You want to be deliberate, okay? And you want to take precaution. Again, this is a big investment. I don't know about you all, but we work too hard for the money, okay? To let the money go down a drain or to put it in something that is not going to be helpful for us. Because remember, home ownership, purchasing real estate is one of the primary ways that we build wealth, especially in our communities. It's important. But you also want to think about, right? And this is where I come in, and this is a part of where my financial expertise comes in at helping you consider those estimated costs, right? What is the budget necessary for some of the things that you might want to do? But also, what's your budget to get you through this transaction? How much do we have in reserves? Right? How much do we have to cover your next couple of mortgages, especially if purchasing this home is a stark difference from where you might be coming from? Everybody's journey is different. You want to make sure that you're comfortable. Yes, your loan officer is going to check some of the boxes on things, but you don't want to be afraid to be able to have these conversations with your realtor because you don't want to have buyer's remorse. We do not want to get to closing 60 days later, you're calling your realtor because you are remorseful that we made this decision because we didn't do our due diligence. Do your due diligence, even if it costs you an extra week or so in the deal. You're worth it, and the investment is worth it. A part of my job is to help with negotiation, right? Especially after inspection based on what we saw. And a lot of times it comes down to, hey, what is it that we really, really want and really, really need, right? Do we need this seller to address this repair? Do we absolutely want them to fix this before we move in, right? My last acquisition on one of the units, right? It was a multifamily. In one of the units, the air was not working. Air and heat was not working. I need you to fix this furnace before I close, right? Sometimes those big things, you want them to eat the cost of that, right? Before you get in and have to pay for it because it can get really expensive for some repairs. Structural work. Sometimes you need them to go ahead and address that, right? You have some joists in your basement that look like they might be falling apart, or you step on the floor too hard, or if you get excited and might jump up one day because you got some good news and you think you might go through the floor. They need to fix that before you close, okay? Especially if you're not buying a property that's intentionally a fixer-upper, right? If we're buying it and we know that we're getting a loan that's going to allow us to purchase the property and do the repairs, that's a little different, right? But if we're purchasing a property that's turnkey that we plan to move into next week, you want to make sure that we're thinking about that. And it's my job to help negotiate those repairs. But also, you may say, you know what, Lindsay? I'll eat this. I have my spouse who's a contractor, or I have a plumber as a cousin, or, people that you know who are licensed, right? License, who you know in your network. You may say, instead of having them fix it, let's negotiate my price. Let's ask them for a price reduction. Okay. And that will cut some cost on your loan so that you can have a little bit more money to play with in the repairs. Granted, right? Let's also be honest, a price reduction on a home, it's great. We love those. However, sometimes when you're thinking about what's going to make the biggest impact, your price reduction over a 30-year mortgage, if that's what you're choosing, sometimes that $10,000 may feel real big until we divide it by like those months across a 30-year loan. You realize, oh, that $10,000 just turned into just $50 a month that we're reducing from the mortgage. Sometimes it's worth it, sometimes it's not. We may need to get even more intentional, right, with how we negotiate it. We might need to say, instead of reducing the price, can they give me the cost of the repairs in a closing credit? And what does that closing credit do? It gives you an immediate solution, right? You immediately get money towards your closing costs. For some of us, we might opt for that, especially so that we can bring less to the table in the acquisition, which means that we keep more of our liquid in our actual bank accounts today that will help us to make those repairs in the future. And then again, we might need to get strategic and do a little bit of everything. We might need them to fix some things. We might want them to still come down on the price a little bit. And we still may negotiate closing credit. Those things are important. Okay. The last deal I did, I represented myself as my own buyer's agent. And I worked for every penny of my commission, okay? Every penny of it. But I had to do some of all of those things. I was able to get them to fix some things. I was able to get them to reduce the price, and I was able to get some additional closing cost credits, right? Not only did we use some of the closing cost credits to reduce, right, how much I had to come to the table with, but we also used some of that to buy down some of my interest rate. So you want to get creative. So we may need just a strategic approach to help you touch a few different things in the process. But again, you want to make sure that you have a realtor who understands this, who can support you in that. And it's just even better if they've done it themselves and actually have a result from what they did, right? And when you're thinking about choosing your battles, right? What do we want to fight for? Because sometimes you go back and forth. Your agent is going to go back and forth with that listing agent. We have a document called the pen, right? Oftentimes you will see some back and forth. My seller will do this, but they're not going to do that. Okay, well, my client said that they need this versus that. It sometimes can take a little minute to go back and forth, right? And every party has a certain amount of days that they have to respond to the other person's message or request in that document. Okay, do not forget that. Okay. Timing is important. So if your agent say, hey, I need you to let me know within the next 24 hours how we want to respond to this, please let them know within that 24 hours, because that usually means they might have 48 hours to then update the paperwork and send it over for you to sign, to then send it over to that listing agent, right? Lots of paperwork, lots of signatures, lots of communication. So make sure that you do your part. But you might want to, there are some things that's like, Lindsay, you know what? I would love for them to give me a fresh coat of paint, but it's fine. I can take care of the minor cosmetic things myself. You might want to create a day where you have a DIY party, okay, where you bring some family and friends who come and help you do some stuff. But they help you paint, they help you maybe replace some things, feed them. Oftentimes they might not want to charge you, so feed them. You order them some food, y'all have a happy, merry way. But then you also may have an opportunity to just plan out your projects. Right now, you might be able to survive with this kitchen. It's fine. 6 months from now, once you're comfortable in your new mortgage and we have some cash flow and we can do some things, then we might use that to make some upgrades and to do some additional things. But you can do them over time. Remember, right? You do not have to walk in here and it has to be the most perfect place, but it has to be perfect for you in that season of your life. Okay? And those can be two different things. We talked a little bit about the earnest money deposit earlier, so I won't harp too much on this, but you want to think of this as your good faith deposit, right? This is you telling that seller that I am committed to this transaction. I am committed to doing my part to get us from under contract to close. Okay. This lets your seller know that you're serious. And what's going to happen is your seller doesn't get this money right away. Okay. This money is held in what we call escrow, and it is protected by that neutral third party, which is typically your title company. Okay. Your title company is going to be deeply involved in every part of this transaction. And what happens is once you're getting ready to close and they send you your final customer disclosure, you're going to see that earnest money deposit that you submitted in the very beginning of your transaction, you're going to see that it actually comes out at the end, right? So it actually goes towards the purchase of that home. So it's you giving your initial investment saying that this is going to be my future property and I am committing to doing my part. And you want to make sure that you do your part, please. Okay. There are some contingencies that can be wrapped in and wrapped around, right? Your earnest money deposit. Ultimately, that is a safeguarding space for you. That is a space for you to put contingencies about your inspection, right? That allows you to back out. When we say contingency, this means that this can happen if this happened as a result. So your inspection may be completely chopped and screwed. Okay. You may have way more things in there than you thought. Some things that show up that your seller did not disclose in their documentation, in their official packet, right? That your buyer's agent, that I would have already looked at, they might not have disclosed some things. but then our inspection report is blowing up with all reds of things that need to be fixed. Having a really, really bad inspection can be a reason for you to back out of the deal, right? Now, you have a certain amount of days because when we first get under contract, there is a certain amount of days that you get to actually fulfill the inspection and to send them the report by. You want to stick to your deadlines, 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 because that will help you miss rights. If you didn't do your part within the inspection period, that seller could say, oh, well, you should have told me this 48 hours ago when we were still in your inspection period. You want to make sure that you're protecting yourself at all costs, and that means showing up and doing your part. Don't have your agent fighting for you harder than you're willing to fight for yourself. Don't have your agent showing up and you're not showing up. Do your part. Make sure that we know that inspection period. As soon as you get under contract and that seller signs on the dotted line, that's when the show starts. Okay. We're collecting time as of that next business day. There can be appraisal contingencies that's built in there. And your lender, right, will help you navigate what this looks like. But if the value of the home based on the purchase price that they lifted is just way too low, that may be an opportunity for you to come out of the deal and get your EMD back, okay? Because we want to make sure that the home is worth the price. Because guess what? Your lender is not going to give you more than what that home is worth. Now, some people, they really want the house. They will opt into paying the extra money. So you can pay the overage if you like. So let's just say the home you want is priced at 350, but it only appraises for 340, right? You can sometimes pay that difference, but you want to have the conversation with your lender and you want to make sure that you have a conversation with yourself. Is it worth it? Is that something that we want to do? Because that means that you're going in there, right? And you don't have equity, first of all, but it also may take you a little bit of time to actually get some equity if it's appraising lower than what you paid for it. That means you need time for it to actually, the value of it to actually catch up to what you paid for it. We don't necessarily love those cases, right? We don't. Are, do people do them? Yes, sure, but it's really kind of on a case by case, okay? And sometimes too, financing contingencies, just depending, because this is a tricky one, because sometimes in the financing space, right? If the buyer cannot seal a deal with their loan, if we got under contract, got too excited and started purchasing furniture immediately and all of the things, and now our credit score has changed and our credit utilization has increased, and now that prohibits your lender from being able to approve you, now that's the own you problem at that point, right? Your seller's not going to be happy with you. And they will keep your EMD if you flopped. Okay. But if there's something that comes up with the financing contingency that is not your fault, and it's based on something that the seller can or won't do, or especially, for example, FHA loans, they're a little bit more, um, they can be a little bit more intense as far as the inspection, right? Because if the government is backing this loan, there are some additional things that they want to make sure is there. Your railings are there, making sure that your cement is level. Some things that your traditional inspector for a conventional loan may or may not call out as a must. But if it is something like that, this is just an example, and your lender is saying, hey, we can't get you approved for this FHA loan if your seller isn't willing to fix these things, then that's a different situation, right? You may be able to say, hey, we can't go through with the financing because you're not willing to do your part. That may be a way for you to, again, get your EMD back. And most importantly, as I mentioned earlier, deadlines, deadlines, deadlines. Know your deadlines. Have your realtor reiterate your deadlines as much as you need to, okay? But you also will have a copy of everything. Go back and look at those contracts to make sure that you're meeting your deadlines, okay? I know that I said a lot, but today's conversation was really meant to wet your whistle, right? To get you excited about this journey, but to most importantly, to let you know that you are not in this alone, okay? You have a partner in this thing. You have a professional who's been around the block a couple of times who can support you in this opportunity, okay? All of my contact information is on the screen. Please reach out to us. We would be so grateful to have a conversation with you to get you on along your journey. We also have the QR code here to our ebook, which is entitled 50 Questions to Ask Your Banker, because you might not even have a really great relationship with a banking institution as of yet. This is your opportunity to learn how to stimulate conversations with them. Yes, it may seem like they get a little nosy and they're asking a lot of questions and all in your business and all of the things, but guess what? They're doing that because they want to learn more about you to be able to educate you on the products and services and the things that they have to offer you. Okay. So feel free to scan that QR code. Check us out on our website. If you have any questions, of course, I'll be here navigating in the chat. But I am excited to bring up Miss Jodi-Kaye Wade, who is our licensed mortgage officer and, right, what she said earlier, real estate investor herself, okay, who is going to be another key partner in this thing in acquiring your next property. So as we prepare to transition, this is a great time to grab some water, wet your whistle real quick, and I am going to switch over to her deck.
How is everybody feeling out there? I hope you're feeling good. I think Zillow does allow, not Zillow, Zoom does allow for thumbs up. Are y'all feeling good? Can I get some thumbs up, thumbs down? How y'all feeling?
Minus you, Kalia. Keep driving safely, please. All
Nice.
right.
Thank you, Felicia. Awesome. Thank you, Jenny. Awesome. Awesome. Awesome.
Awesome. So
Hopefully, you all have gained much knowledge from the agent perspective, and hopefully, my financing perspective, you all feel just as excited after I complete my presentation. So, again, I'm Jodi-Kaye Wade. It's so great to be here with you all this Saturday. You all know a little about me already. I work with Edge Home Finance, one of the largest mortgage brokers in the country. I'm also a loan officer where I am working with you all hand in hand to get you approved to get financing and ultimately in your home. I also have my own company, which I didn't talk about earlier, but basically I do financial coaching as well. And I support clients with improving their personal finances and figuring out different ways to get to their goal of retiring early if that is something they desire. But today's not real estate, so let's talk about that. Next slide. So the journey, right, to homeownership or financing your path to homeownership. The key step, first step, is to get the financing lined up, right? And once that's lined up, then you can happily go house hunting without any concerns, right? You know that you have someone, ideally me, has reviewed your finances, your income, your assets, reviewed your credit reporting, your credit profile, calculated your DTI to see whether it fits within the guidelines. And then most importantly, you are comfortable with the monthly payment. The monthly payment is so important for you to understand because interest rate is what influences the monthly payment, right? I mean, credit score, which is determined by your interest rate, right? Uh, then sets what your monthly payment is. But then also you need to know what the monthly payment is if you're getting a condo, what has condo fees, which varies from a single family or townhouse where they may have an HOA. But it's not just the loan alone, where sometimes people go online and they're like, oh, I expected this amount. I'm like, no, you didn't include property taxes, you didn't include insurance. So as a loan officer, I try to talk to you about the total estimated monthly payment. Okay, next slide. So I kind of touched on this already, credit, right? So what your credit score is, we look at your FICO score. What that score is affects your loan approval, your rate, and your monthly payment. Now, when it comes to credit, it's not just about the score again, it's your whole credit profile. We are looking at, have you had any late payments in the past 12 months? Okay. We also look at whether you have had any collections well recently. So we look at these things to be able to calculate your debt to income ratio. If for some reason your DTI is too high, then we will come together with a strategy to have it lower. So it's either paying off some debt or sorry, I'm back. I am a working mother. So we look at your DTI to see, okay, if you need to pay off any debt to get your DTI down, for example, to qualify for an FHA loan, around 56% is the maximum DTI that you can have. For conventional, under 50%, you can be approved for. So these are some of the things that we look at up front to make sure that there aren't issues once you're under contract. Okay. So again, credit is the beginning. And then we kind of look at the other things, the income, the assets, the credit profile, debt to income ratio, and then also your monthly payment. Okay, next slide, please. Now, if for some reason your score is not necessarily 650 or 750, right? And you want to know, like, what does that really mean? Like, okay, so my score is not the best. How does that impact my payment? So this here is really for you to understand that if your score is higher, you're able to save money, but it doesn't prevent you from qualifying. Okay, I work with people all the time who have scores in the low 600s and we're able to qualify them for a loan. The key thing is, can you afford the monthly payment? That is the conversation. No matter what's going on globally with the markets, as they go up, they go down, right? But at that moment when you are trying to buy, can you afford the monthly payment with your other obligations? We look at it from the DTI perspective, but you have to know if you're comfortable with that payment. Now, you can see here, if your score is higher, you have a lower interest rate. And this is to let you know, hypothetically, in this scenario, if you buy a $400,000 home and it's a 30-year fixed mortgage, we're only looking at the principal and interest here, and it's a 6.5% interest rate. The loan alone is around 25, 28 a month. Okay. Now, if you have a better interest rate, I mean, you have a high score, you get a better interest rate. That's around 2,172 a month. Okay. So this is showing that if your score is higher, your interest rate you qualify for will be lower. Now, that helps you save, of course, over the life of the loan. But you always have the chance, if your score improves and rates go down, to refinance. So you're never locked in for 30 years. But I try to let people know the importance of the credit score. Now, what makes up a monthly payment? I already talked a little about this. It's not just the loan alone, the principal and interest. You have property taxes, homeowners insurance, depending on the property, and HOA and condo fee. And one key thing for you to remember, if you put less than 20% down, you have to pay some called mortgage insurance. That's whether you have good credit or not. Everyone has to pay that. So keep that in mind. But basically, if you are buying, there are multiple different things you pay for every month on a home. Next slide, please. So this is very quickly a slide to let you know what are the key drivers of your credit score. You will see the two main things is payment history and amount owed. So if you have late payments, that lowers your score. Okay. Positive payment history is the key thing that gets your score up. You have the ability to even self-report some other payments you make monthly that normally don't fit on your credit report. So, for example, self-incorporated is one way you can get your rent reported, your utilities. So these are things people can look at if they want to add some more positive payment history. Okay. Another thing to look at is amount owed. Keep the amount you owe under 30%. So, for example, on a credit card, you may have a credit limit, but you should not be using that full credit. Okay. So try to spend under 30%. And if for some reason you spend more than that, before the settlement date, try to pay it down. That's another way to get your score up. If you have an ability to raise your limit, that's another easy way to get the score down because then your utilization number goes down. Once a year, I think, is a good time to just ask for a credit increase. Doesn't hurt. And that also, again, boosts your score. Next slide, please. So, what score do you need? As I mentioned before, I've been able to get people qualified for a home in the low 600s. You can even get qualified for even lower than that. But the GTI, again, matters. But then also your down payment will be higher. Okay. So, very quickly here, these are just some of the mortgage products. There are many, many more that a person can qualify for. But for FHA, if you have at least a 580 credit score, you can put 3.5% down payment. It includes a mortgage insurance upfront as well as annually. It's a government-backed loan. For VA, ideally 620, but some people can get qualified for less than that, especially as I work with many lenders. There's some who are a lot more flexible on credit. 100% financing if you are looking to take advantage of the VA loan. 100% financing, especially if you are married and even if your spouse is not a veteran. If you're not married and you want your spouse or your girlfriend, sorry, on the loan, then there is a down payment requirement. So there's a caveat to that. There's a one-time VA funding fee when you use the VA loan, and you can use the VA loan multiple times. So if there's ever questions about that for those who may be in the room who are military, I'm happy to talk with you more about that in the Q&A period. USDA loan is also available for those who are interested in that. It really depends on the property and where it's located. So not everyone is able to take advantage of that opportunity where you put no down payment, 100% financing, and eligible rule, and so okay. There's also a guarantee fee upfront and annually. Again, it's to manage the program. They need these funding fees, but then also to support the financing of that. Okay. Conventional loan. So 620 to 640 minimum, ideally get better rates at 680 and above. Minimum down payment 3%. Some lenders is 5%. But basically the benefit of that is when you put less than 20% down, you do have to pay mortgage insurance, it's called PMI. But once you get to 20% equity, that mortgage insurance goes away. So that's one benefit. So that's one less monthly payment if you have 20% equity in the home. Next slide, please. One thing I want to add, because there are different set of people here, even some small business owners. This is just one set of mortgage products that I talked about in the last slide. Those are called qualified mortgages. There's also something called non-QM mortgages. So that opens up a way more options for people depending on their situation. Did you know that you can qualify for a loan without having filed taxes? Did you know that you can qualify for a loan simply based on the income coming into your bank statements? These are possible with non-QM loans. So there's something called bank statement loans, asset-based loans. Um, there is also the doctor loan program. Many, many options that are available that are not fitting in with FHA, VA, conventional, these types of things. Okay. So I touched on DTI already. I'm not going to talk too much about it, but basically, when we look at your credit report and we pull in your liabilities, we're looking at any existing mortgages, car loans, credit cards, student loans, alimony and child support that's court ordered. We look at that. And that's what we use to calculate your DTI in addition to adding the mortgage. So the combined expenses. And again, for DTI, if that's ever a concern for you, you can increase your income, pay down debt, consolidate debt to a lower interest rate, and really avoid taking on new debt, especially if you're trying to buy a house. Next slide, please. So, for those who may be in the room that are interested in down payment assistance, there are many, many options. So now that we're talking about down payment assistance, I want you to know that it's not just state county programs that are available. Working with over 100 lenders, many of them have their own in-house down payment assistance programs. And it typically is, and these are nationwide. Um, you can get these DPAs if you get a FHA loan, have a minimum of a 600 credit score. You can get up to 5% of the purchase price as your down payment assistance. And it's not just for first-time home buyers. A lot of the state and county programs only for first-time home buyers. The key thing is it has to be your primary residence. So let's say you live in Louisiana, own a house there. Now you're in DC, your house is rented. You don't want to sell that house. You can still get DPA if you need it. Okay. And there are two key things. It can be forgivable after 10 years, or you pay a little bit for that DPA amount as a second lien. Okay. Next slide, please. So for the investors that are in the room that are wondering, what is she going to talk about? How I can get financed? It's your time now. So the most common financing option for investors is DSCR. It's basically a 30-year loan to allow you to get the asset purely focused on the rental income potential. Okay. There are other products available for financing if you want to do fix and flip or round up construction. There's so many options, but for a typical long-term rental, even for short-term rental financing, you buy the asset, how much rent can you get every month? Can you get a loan that's less than that rent amount? That's it. When asked you about your pay stubs, when asked you about your taxes, do you have the down payment of at least 20%? Can the rent be more than a mortgage? Is your credit score at least 660? Some lenders allow 640. And then do you have some liquidity as a reserve? Okay, because they are looking to you ultimately to cover the mortgage if the tenant doesn't pay. So do you have a reserve to cover at least 3 months of the mortgage? Next slide, please. So non-QM. I touched on this earlier, but you can see on the screen, there are many, many mortgage products that are available. So if you want to get a mortgage to buy your home, you do not need to fit into just the FHA, VA, conventional USDA loan products guidelines. I've gotten so many clients who are like, I wasn't able to qualify because they said my taxes, I don't make any money. I was like, well, it's because you're a business owner. That makes sense. Many people write off a lot of their income. But as a business owner, you can get a bank statement loan. We look at the past 12 to 24 months of those deposits and see what on average would you say is your income to be able to then qualify you. So don't say, man, I can't qualify. Talk to a loan officer. We work evenings, weekends, respond to text messages. Let's have a conversation. Let someone deny you versus you deny yourself. Okay. So you'll see here very quickly bank statement loans, investor loans for long-term rentals or short-term rentals, asset depletion loans, interest-only loans, foreign national loans if you're a non-US citizen that want to purchase in America, doctor loan programs. There are many options. So let's have a conversation. Next slide. So source of funds. This slide, I just wanted you all to understand that um, the process of financing requires us to be able to know where funds are coming from for the down payment and to cover closing costs. So we always ask for the last 3 months bank statements or last 2 months, depending on the lender. For some reason, we see $30,000 and you don't normally get those types of deposits. We're going to ask where the money came from. Again, this is because of laws set to prevent money laundering and fraud and illegal activity. Okay, so just keep in mind, keep documenting. Okay, so if you make tips and do different things, multiple jobs, just make sure you can easily track where the funds are coming from. Even if they're a gift from family, they should be able to easily provide bank statements that show the money then came to you. And then your bank statement has the same number. You have to be able to track all of that information. Same thing with investors who want to buy a investment property, want to do a HELOC from their primary residence and then put the money into investment property. We need to have the documentation and say, okay, that's where the $105,000 came from. You know what I mean? So just keep that in mind. Documentation, documentation, documentation. Everything we will require is going to be a document that you'll need to provide to validate everything that is stated on the loan application, but then also where the funds are coming from. Okay. So some general guidelines is bank statements the past 2, 3 months, gift letter if anyone's going to give you funds, their bank statement to show where the gift came from, paper trail for large deposits, and any sales needs to be documented as well. So you sell a car, you sell a house, and then now you have these deposits that are coming in. We need that. Okay, next slide, please. So I want to touch on briefly renovations because in the Baltimore area where this webinar was really focused on, quite a bit of people want to buy and do renovations. So whether you're an investor or purchasing a primary residence, there are loan products available for renovations. And I just mentioned a few here. So for primary residents, there are renovation loan products that are both for FHA and conventional and even USDA, where basically you buy the primary residence and add renovation costs. You got to be able to qualify for the combined total. So let's say you want to buy a home that's around 300, 350. There's different types of FHA, but FHA 203K, where you can do 75,000 max. There's another that's higher. But essentially, let's say that's 75,000 and that's 300,000. You now need to be able to qualify for the loan for the 375. Okay. And that's basically primary residence. Have to have licensed contractors do the work. There will be an appraisal on it after renovation value. Funds, that $75,000 funds will be in a escrow where you'll draw on it and pay contractors as work is being done. When it comes to investors for rehab, fix and flip, you want to do a rehab to increase the value of a property that you're renting. Same thing, you'll need to provide a scope of work, have licensed contractors do appraisal. There'll be inspections and things like that. So whenever you want to do renovations, just definitely keep the lender close so that we can be answering questions so that I can go as smoothly as possible. But I just wanted you to know it is possible to buy a home that needs some renovations and get the capital as well as the money for the purchase. Next slide, please. So are you mortgage ready? Have you started the process to collect your documents? This time of year in particular, I'm sure people are drowning in documentation as they're filing tax. And just go ahead and put a separate file and say my loan application. This document I also need for my loan application. So W-2 and 1099 documents, last 30 days pay stubs, bank statements, these types of things are what we're going to look for or request from you so that you can buy a home. So the pre-approval process with me, I work 24/7 to meet the client needs. If you apply today, you'll hear back something tomorrow. So it don't take long if you are serious about buying a home. Okay. Next slide, please. So this is just some general tips. Depending on who's in the room and their situation, I just wanted you to have this information as a takeaway. So let's say, and this is kind of a full circle moment because we started about credit in the beginning. Let's say you want to boost your credit and oh man, I don't want to pay more monthly payment because of the higher interest. Here's some things you can do, okay, to boost your credit. Pay down your debt. Okay, pay the balances down. That will boost your credit. Increase the credit limit. Is there anything inaccurate on your credit report, or unverifiable, or incomplete? Dispute that. Now, you cannot have any disputes on the credit report when you're trying to buy a home, but these are some things you can do in advance. Okay, Don't open new credit before a mortgage. All right. Be consistent on time payments. No late payments in the past 12 months. That is a no-no, and the loan will not happen. Okay. So please stay on top of that. Automate. Do not get a late payment. Do not make yourself lose out on your blessing, your 400,000, your $500,000 home because you missed the $12 uh payment. Okay. So please stay on top of that. Now, don't max out cards. Apply for new credits. Co-sign loans. Change your job suddenly. We're gonna look at 2 years work history. So if you're gonna have a job and then switch to another job because of promotion, no problem. They're both W-2. However, if you had a W-2 job and now a 1099, that's a problem. Because we'll need 2 years of the W-2 or 2 years of the 1099 job. Okay, so keep that in mind. No late payments. Don't move money around. We got to be able to track where funds are coming from. Once you're trying to buy a house, let's say you have some money in stocks, you got money in a high yield savings account, you got money in your commercial bank. Have those three institutions send it to the title company. Do not consolidate it into one account. That's going to cause problems. Just do the wire from the stock market account. Do the wire from, 1 minute, Chelsea.
We love these human moments, y'all, and I think COVID allowed us extra grace and space when these things happen, right? Because in real life, we are working professionals with a lot of personal things. So we're here for you, Jodi-Kaye. No need to apologize.
Yes, I appreciate y'all patience, especially on the internet. I know this is live, but this is as a mama too. So sorry about that. But when I said about the title company again, when you're about to close on a house, you have funds in different places. Just wire directly from those funds, I mean those accounts to the title company. Because one of the things they're going to ask is the transaction statement. Where funds left, where funds are the balance now. To see that it came from you. Again, the guidelines of the federal government. All right, next slide, please. All right, so that was all, you guys. I stayed within my 30 minutes. If you have questions, I am here. I am so pumped to be here with you all again. I am so passionate about helping people own and build own something. Do not continue to pay for someone else's mortgage when you can own. Now, you are a landlord, you want them to pay your mortgage, but you are renting for those who are first time home buyers. Imagine for 5 years you're renting someone's home. Let's do the math. You're going to spend almost $60,000 in this market. Okay. $3,000 average rent in this area. Before you know it, you could have bought a house in this equity. Like it just doesn't make sense. The math is not mathing. Okay. So please, let's have a conversation. Let's talk about what you can qualify for. Well, let's get you into a home. We're entering the spring. Houses are on the market. Take advantage of these homes. Get seller credits. Save some of your closing costs. Negotiate with the really good agent we have here. Okay. This is what I am here and excited to be in this room with you all because I feel and I know, okay, that it is possible to go from I'm qualified to I'm on the contract. I've had great. Well, anyhow, I just wanted to say it's a pleasure to be here with y'all in this virtual room, and feel free to reach out. This is my personal number. You'll see 954 because I'm from Florida, Floridian, but this is my personal stuff. So feel free to call and text me anytime.
Awesome. Thank you, thank you, thank you so much, Jodi-Kaye, for all of that information, especially making sure that our folks know that both homeownership and investment is it's possible. Okay. I know that there is some real estate out there with your name on it. Trust me, I know it might feel scary, but you have the right team between the two of us who would love to usher you into this new season of purchasing real estate. I'm going to leave Jodi-Kaye's information up on the screen just for another moment. But we want to make sure that we turn it over to our audience for any questions, whether in the chats on Facebook Live. I'm looking at the comments over here. What questions do you all have? Remember, no question is too small. Come on, y'all. I know it's something brewing. Unless both presentations were just that doggone good that it answered all of the things that you could have thought to even ask.
So for those who are here, how about you just come off of mute and introduce yourself and kind of tell us where you are in your home buying journey? Should we call name? Go
No.
ahead, Felicia.
Hello. Thank you for the presentation. It was very, very insightful. So, I am currently a Maryland realtor, but I'm also in the process of buying my home. So, I found this presentation just as a fellow realtor. Thank you so much for sharing that. And for Jodi-Kaye, that's how we met. I'm currently in the process of looking for my home right now. So, the information that she gave for the financial standpoint was very, very valuable. So, I thank you guys for having this. This is really, really good. So keep it going. But I'm happy to be here to be a part of it today.
Yes, thank you for coming. And listen, I believe that collaboration over competition any day. So,
Right.
if there's anything that we can do together, there may be a listing I have that you need, or, whatever that
A
looks like,
partnership.
more than happy to stay in contact.
I would love that. I love.
Yes. Amazing. Anyone else?
Jenny, would you like to say something?
Sorry, I had to run outside. I'm actually in Virginia at a track meet with my son, but I guess I can introduce myself. I am a family of six that is looking for a home together. My partner has her own home, but we're looking for a home together. Um, and I guess we're just trying to figure it out. It's hard.
And that's okay. You're safe here. I know it feels hard, but you've got this, and you're already starting your journey with, working with myself and Jodi-Kaye. So we've got you. We've got you. We've got your family.
Thank you.
Of
And
course.
this presentation was amazing.
Thank you. Thank you. Thank you.
Awesome.
Thank you. We
Thank you.
we love and appreciate that. I know Kalia said she was driving earlier and she hopped off before we got to her, and that's all right. But thank you again to everybody who came out, who's here with us in Zoom, but who's also here with us on Facebook Live. This recording will also be making it to YouTube. So please make sure that you share with someone else, because you never know who might need what we have, right? Even if it's just information, right? We want to make sure that we're not leaving anybody behind. We don't believe in gatekeeping around here, right? This information is for all of us because we all deserve to be able to build equity and to really build a sense of financial stability for ourselves. So it was indeed an honor to have you all. Thank you for being here with us, and we look forward to seeing you all soon and getting some of those pre-approvals. Have a great rest of your Saturday, everyone.
Thank you.